What is up, guys? Got a big show today. Well, I guess we're going to be um, busy. So huge weekend. Got a ton of stuff to top off here, but let's get into it. All right, I think I got this stuff sorted out for the most part. So appreciate that, guys. Huge weekend. I'm going to see if we can get some of this stuff up. All right. Before we get started, just got to point out options are not for everyone. We are an options trading group. We have a ton to talk about today, so I'm going to get through this really fast, but please call 1-888-OPTIONS before you start trading. All right, cool. So major market. Love the thumbnails by the crew. Thank you guys very much. So what I'm going to do this time, what's up, man? We will overlay this chart. So let's see. Can I get this a little bit better? Nah. I'm just going to run with it. So we had a massive weekend. And if you guys don't know, there was this Silicon Valley Bank, fiasco. And I'm like trying to type out all of my notes and everything, prep over the weekend. And I'm like, okay, pretty much everything I wanted to do more or less goes out the window at this point. So it's a little rough. We normally would actually have a pretty big, let's say, economic data week ahead of us. But the thing is, what's going on with Silicon Valley Bank and the broader situation could completely mess up all of that stuff. So here we go. So here's the recap, right? And again, I had so much stuff I could throw up here, but at a certain point, I was like, none of this actually matters. So I'm going to go high level if you don't get what's going on. So Silicon Valley Bank last week, I think it was Thursday, in the market just dropped like a rock. And I'm like, what's going on here? So really what happened was that there's something called a bank run. And essentially, there wasn't enough funds freely available in the bank to cover potential withdrawals, basically to cover the accounts. And they had to go in a quick fashion and try to get the money available for people to withdraw. And it really didn't work out for them. And come Friday, really, Federal Reserve had stepped in, shut the bank down. Federal FDIC came in, shut the bank down, seized everything. And there was this huge shenanigans going on over the weekend where people were really worried that they weren't going to get money out of the bank. And if you don't know what Silicon Valley Bank is or what they're about, I live in Silicon Valley, so this is kind of like the home bank for a lot of people or a lot of startups, really. And most of the customers Silicon Valley Bank had, like 93% of them, were VC and VC funded startups. And when you think about that, it's like if you can't get money out and they have to pay payroll, there was this much broader like fear and definite just fear, right? It was never really going to happen where the government was going to let people's accounts not be withdrawn. Like that would be some massively overdone situation that will never happen, never has happened. I don't think it ever will happen. And thankfully it didn't happen. But over the weekend, I mean, the coverage across the board, Twitter, I mean, I was scrolling through Twitter and all weekend long there were these spaces with like 15-20,000 people on them. I'm like, Sunday night there's still 10,000 people. I'm like, this is crazy. So what I could say is there's not any worry like of people not being able to get money out of the banks anymore, and they call that like depositors. Anybody who's deposited money, any fear of not being able to get money out of the bank, that's not going to be an issue. It never really has been, but that was the FUD, if you will, going around. And then the question becomes like, well, how did this happen? And in our server, it was Thursday, I believe. We were all talking about it. It was like, at first I read it as like, oh, okay, well, they were just raising capital and they're going to get probably a decent rate. But then when you start looking into it, it's like, holy crap, why are they doing this? And I put a couple slides together as to why they're doing it. but you know, the external, the word is contagion, right? What's actually going on? That's a real fear. And I think something that definitely deserves to be talked about, at least just so you know, from an investing perspective, what I'm thinking. This is not necessarily financial advice, but what I'm doing, uh, and what some of the like potential, you know, things to watch out for down the road may be. So as of today, uh, we don't really have anything to worry about immediately. But what was funny? There's so much coverage last weekend. This weekend was like March 10th, I think it was. That this happened, and it just so happens, I think it was Bear Stearns was on March 10th also, and in the financial crisis. And then like 6 days later, there was this major like fallout. So for now, nothing really to do, but probably want to start thinking about, what do I own? What's possibly at risk? And what can I do? Do I need to reposition? Things like that. So we're going to go over a little bit of that today. That said, there's a impact that could potentially happen on the FOMC meeting this month, and I think it's next week. And that's right now what's kind of this push-pull situation in the market, right? So I'll just gonna go into, let's see if I can skip through. Here's the deal, right? We had something called a bank run, and I just put kind of like the course of events right here on what actually happened. And so Silicon Valley Bank, they had all these things called like hold to maturity loans, like long-term bonds in their portfolio. And that's really like the crux of the issue. It's nothing, honestly, it has nothing to do with venture capital or Silicon Valley. It's there was so much nonsense about like, is this a Silicon Valley centric thing? Is it just happening in this just regional area? I don't think so, right? I don't think so at all, right? And what I would say is that when you get into the numbers and in the weeds of what actually happened, it's all about this hold to maturity funds. And right now, I think the market's kind of catching on to that, and that's really what's the discussion. Not so much Silicon Valley centric. I highly doubt that sticks around. But there was specific to Silicon Valley Bank why they were the first ones. What's going on? So just so you know, in a bond portfolio, and yeah, we got some of the guys here. They know if you're in the server, you know what we're doing already. You pretty much know what I'm going to say. But for the broader audience, bonds are one thing, and bond yields are a whole nother thing, right? So like if you own a bond, right? I'm just going to grab a piece of paper. Like here's my bond, right? And this bond will yield me X% over time, right? It's a annualized percent. And let's say I have a 10-year bond or a 20-year bond, and it's going to pay me at the time when I bought it, it was just kind of like free money, or like it was very, very low, right? Very low rate. I think low, right? Yeah. And since then, the Fed has started to raise rates right here. And what happens when the Fed starts to raise rates, the value of my bond actually changes, right? Well, yes, I'm still getting my yield, but the value of my bond, the paper, changes. And this is the crux of the issue, right? If you're holding these bonds, yeah, you're getting paid out your annualized rate. But the problem is that this bond paper that I paid for it, I paid a lot more for it. So as rates go down, the prices of bonds go up. I bought when rates were really low. So I bought my piece of paper, my bond, high, right? The yield is called the coupon rate, by the way. And as yields go up, the price of my bond, value of my bond, goes down. And so this is what's going on, is you have this like, I can't really sell my bond unless I take a loss on the paper, right? If I hold it to maturity, HTM, right, is the term, hold to maturity funds, then yeah, I'll get my yield and everything will be fine. But if I sell it beforehand, I'm going to take a loss on my paper. And so what happened specific to Silicon Valley was that they were holding this loss on the paper while they're collecting the yield. And in the interim, for the Valley, VC funding really has been drying up for the last, I want to say like 2 years, maybe call it a year. VC funds, really just the funding situation, IPOs, all that kind of stuff, drying up significantly. And Silicon Valley Bank, 93% of their customers are these small startups, and they need a lot of cash to survive. So what happens is Silicon Valley Bank starts to sell some of those long bonds. And once you sell them, they have this thing called mark to market, right? And so once you sell them from an accounting perspective, all of those bonds that you just sold lower than what you bought, that immediately gets hit. I think it's all of them. Don't quote me there. But the bonds immediately show up on an accounting perspective as a massive loss. And so on paper, Silicon Valley Bank had just taken like a $2.5 billion loss like overnight. And they're like, oh crap. So what are we going to do? They announce a stock sale, like a private equity round. Like they're going to, we're going to give you a discount to buy some stock. But the problem is nobody really started showing up. That day, the stock drops like 60%. And then somewhere in the next like 24 to 36 hours, Peter Thiel, if you don't know who he is, he's like Silicon Valley royalty, like actual royalty, basically sends out a note to his customers saying that he advises their startups to pull their cash from the bank. I don't know if it was a personal thing or what, but this one event is the one thing that really like lit the fire. That was the match that started the run. And all of a sudden, $42 billion, this is March 9th, in attempted withdrawals. And the bank doesn't have that kind of liquidity. They can't cover 42 billion like overnight. And then when they try to do their offering, there's like no bid. And the next day, the stock falls another 60%. So you're down like huge out of the gate. And then come Friday, FDIC has seized the bank essentially, and then we go into this weekend of holy crap, what's going on, right? And yeah, I mean that's really where we are. And then so Silicon Valley specific, all these FOMO about, or not FOMO, but fear FUD about, am I not going to get my deposit? Look, I know some pretty connected people. Like, if you're in Silicon Valley, I hope you don't actually think that was really a thing. I mean, it was potentially cautious. Yeah. Maybe I'm early saying this, but it's never happened where you couldn't get your money out. Maybe you can't get your money out that day. And that was the biggest fears, because you're going to have to go and wait a little while, but eventually you're going to get your money. But if you need that money quickly, that's the problem, right? And that's what happened, where like all of a sudden people at other smaller banks who might have these like hold to maturity securities. And this is where we are, right? Like, it's not just Silicon Valley Bank. There is a ton of banks that have a ton of this going on in their balance sheets. And, if you think that your bank's, like at risk, then they're going to start moving. And there was so many wires like set up over the weekend for Monday morning come, I'm going to transfer X millions of dollars out of this bank into the larger banks. What I would say is that the larger banks, like the JP Morgans, things like that, they're not really at risk, right? As far as I can tell, there's not really a situation where they're going to go under. Does something like, I think it was First Republic Bank, they're down like another, I don't know how many percent today. Like, are there some risks? Maybe, right? I don't know, right? I'm not really deep in there, but what I could say is this is what's happening, right? And so now the question of like what's going to happen, right? So now, as of let me go back. So now Goldman Sachs comes out this morning, I believe it was, saying that, hey, they don't think that that the Fed is going to raise rates at all come March, which, that's probably, I don't know that the Fed's actually going to change anything. But, early last week, people were saying, oh, well, we got these NFP numbers. By the way, I can go into these NFP numbers. So early last week, we got these NFP numbers that came in at like 311. So bad data is good for the market in this scenario. So we came in a lot lower than prior. So, okay, well, we can raise rates, right? 50 basis points is what a lot of people were talking about last week. And it's like, no, probably not, right? At this point, I don't see that happening, but this will affect, in general, what we're talking about is liquidity, right? Like, is there enough cash to go around. And, I wasn't like actively trading in a financial crisis. So I don't really know. And honestly, I wasn't even that old then, but like apparently there were like $200 max withdrawals on your ATMs, right? I hope we don't ever get to something like that. Actually looks like Michael's coming up here. I got a buddy of ours, really good friend of mine. I'm going to pop this off for just a second and I'm going to say, what's up to Michael? Let's get this. How do I get this? Oh my, let's get him over here. What's up, man? There he is. So Michael is
check out my washing machine in the background. Don't forget.
Yeah, I can hear. I think they can hear. Michael's one of my favorites. I'm going to call him analyst, right? But at Tiny Real is his handle on Twitter. If you don't know Michael, I mean, this dude is. I'm just a super fan, dude. That's all I can say. But I would like to hear some of your.
It's very mutual. So
I love it, man. I love it. I would like to hear some of your comments or sentiment, maybe on the situation. I know we saw a ton of like shenanigans going on over the weekend and a lot of FUD, but some things are real. Some things we don't know. But what are you thinking right now?
Look, I posted this on my wall. You could see it the whole way. I was in some of those big spaces with that I saw you in as well, and a lot of people were coming out, parading, talking about how this is a systemic risk to the system, right, and this and that. Again, this is not political. This is just I'm just stating facts, right? Biden has a $6.8 trillion budget proposal. We've given a lot of money to Ukraine and more is pledged, right?
True.
There's no way they're not going to backstop this for 25 to 50 million, because one of the billion, sorry, 25 to 50 billion, you would have wrote that check, right? I mean, 25 to 50 billion is what I mean. So there's no way they weren't going to backstop this for this, because what people don't understand is, and this is so let me give a real quick scenario. So Silicon Valley Bank, they're done. They're insolvent. The shareholders, unfortunately, got screwed. The management probably lost their pension, et cetera, et cetera. But here's the depositors, right? You have money. You probably do have money there. You live up there. So whatever. So let's say you have money there. Let's say something like Marcus from Goldman Sachs, right? They're trying to expand their banking arm. So let's say Marcus comes in and says, we're going to buy Silicon Valley Bank. Okay. So now, hey, dear Mr. Paper Gains, as a former depositor of Silicon Valley Bank, you may not have known, but we've taken over. Marcus has taken over. We're backed by $955 billion, and the government has also backstopped your deposit, so everything is safe. Are you going to now go and take your money out of the bank?
Right.
Probably not. Now, some still will. Some still will think that, it's time to pull all your money out and squirrel it under the mat. That's fine. I'm not. There are people that are going to be that. But most level-headed people are going to say, you know what? Yeah, Marcus. But let's go the other side of the level people, right? So there's the unleveled people that'll go and take all their money out and put it on their mattress. What about the other side of the people, which unfortunately I lean more towards, which is, the government's got your back. What's the difference?
Yeah.
A lot of people are going to start saying that, right?
I mean, unless you needed like millions of dollars to pull out overnight, I'm like, I don't think it's going to be a thing, right?
But here's the thing, what are you going to do? Like a lot of people go, well, the bank, no, I don't want a bank account anymore. Okay, so you run a payment processor for your Discord server. Yeah. Where are they going to send the freaking money? What are they going to have, an armored car pull up? And I'm not saying that you make millions. Let's say you make $500 today on your Discord server selling subscriptions. What is an armored car going to come and drop off $500 in cash? Come on. Right. It has to be. And so, okay, so maybe you say, no, well, that's ridiculous, Mike. Instead, let's wait till it's 5,000 and drop it off. Okay, well, where are they going to store it until it gets to the 5,000?
Right, under the bed, right now.
It's like Grant Cardone, I thought was the best when he's like, I'm doing about $1 million a day between my retail products and my rentals and stuff. What am I supposed to do without a bank? open up 5 new accounts every day, and people say, no, it's valid. It's guaranteed to 250. Okay, that's if you're exactly at $1 million and there's no interest. What if you're at $1,001,001? Now you need 5 accounts. So let's just call 5 accounts. What am I supposed to do? Open 5 accounts a day? The banks are going to throw you out of it. They're going to be like, yo, you're not opening 5 accounts a day. And what do you do on the weekends? What do you do on Saturday and Sundays when the banks are closed? So, all right. Anyway, to me, it's like, I don't like to say it. I understand. I don't want to be this Pollyanna and what's funny about me, I was just telling this story, so people should know this, is despite the fact that you hear me on the spaces and talking about the market going lower most of the time last year and all that other stuff.
Surprisingly not lately, but yeah.
Yeah, I'm a dyed-in-the-wool optimist. I don't believe that the United States is going to fail. I don't believe the dollar is not going to be. Look, it's still, and I apologize to anybody who's not in America, right? But it's still the American dream. It's not called the Bangladesh dream, right? It's not. It's called the American dream. And look, I have people that are Thai. They're from Thailand. They're here now. They're American citizens, but they still go back to Thailand every couple of years. Listen to this. Okay, they get more money when they exchange their rate for $100 bills than they do for smaller denomination. Now, I'm not saying, they get 120%. I'm not saying that. I don't care what it is. But can you imagine that you get $100.10 worth of value instead of just $100? It doesn't seem like much, but the point is, there are countries around the globe that are paying premium for U.S. dollars still.
Yeah.
What I'm trying to say is America is still the place to be. It's still the strongest economy. It's still whatever. So I'm a dyed-in-the-wool optimist. I did not believe, and you saw what I posted on my timeline. You saw what I posted to you in direct message. I did not think that with so Biden, $6.8 trillion. I already said it, but the $7 trillion budget, the help with Ukraine, nobody would ever be able to. They would never allow not to get backstopped. So let's go back to what I was saying. But I want to finish this final thought. Finish the final thought. So why is it only 25 to 50 billion? Well, okay. So the scenario to you, paper, is okay. We've taken over the accounts and you're safe. Okay, I'm going to leave my money there. Well, then they don't need to bail out anything. It's there for. It's like wearing an athletic cup. Right? You don't walk around saying, gee, I hope I get kicked in the balls all the time, but it's there just in case. And it's a backstop. It's not a bailout. So anyway, that's right, Scott. I will trade anywhere, anytime, even in my lawn. If you got a problem with that, you can talk to my wife, because she's the one who set up my office in here. But I digress. So anyway, so I thought it was a lot to do about nothing. I will tell you another thing. I lost a lot of respect for a lot of people over the weekend. Some big names were coming out saying some stuff that was rattling.
I think that was probably the biggest thing, right? Like when we saw that kind of stuff, it was like, man, like if you're big on social, right? Like you kind of want to use that platform. I mean, not to spread the FUD, right? Like to maybe calm it down. But I think Twitter, FinTwit, Fin Social, whatever it is, FinTalk, like probably I mean, we'd hope to see like some of that being like calmed down, right? But I think what's different today about back then too is like the rate of speed at which things can like go out is just insane. Ridiculous. It's like boom, instantly, right? We had CEOs,
Donald Powell, who's not related to Jerome, as far as I know, but I don't think he is. He was the former head of the FDIC, and he has a quote. He said he's never seen it, but he says in the old days, the bank run would take time. He said this.
No, this was 36, 48 hours. Maybe it took to take out Silica, the 24th biggest bank in the U.S. Like, what is that, or whatever it was?
He said, I'm using his words, right? So I'm not spreading a rumor of a bank run or anything. I don't want to be caught in that nonsense. But he said it, and it's in Bloomberg, and he said it's like a rocket ship. Like he's never seen something this fit. And he was the head of the FDIC for 4 years. So it's like, this is crazy. And I have to tell you, what did people, it's like, look, Jaguar was on a Spaces earlier today. I don't think you heard what he said, but he he has calmed down now. He says, I'm not going to make opinions on stuff because regulators are
I mean,
looking.
he
Blah,
was
blah, blah,
pretty
blah.
adamant for a week, maybe like 2 weeks, right?
Right.
Like this is
But
this
now,
is
no,
happening,
now he's
right?
backing off. Right, but now he's backing off. Like somebody asked him, "What is my money safe in Schwab?" And he's like, "I'm not giving opinions on that." Now, look,
Yeah,
the First Amendment protects us from giving our opinions. Right, great. But what it doesn't protect us from is yelling fire in a crowded room.
true
That's
story.
not what the First Amendment is for, right? You can say whatever you want. You can't yell fire in a crowded room. That could cause harm. And when people come on FinTwit or elsewhere and go, sources that are close to
Yeah,
the situation that I trust are saying this is the scenario that's going to happen. I want to see that guy's holdings. I want to see if
yeah,
he
and that's
was
the
short.
question, right? That's the question. Yeah,
Yeah.
I
Yeah. So
mean,
anyway, I'm sorry. I
it's
know I
tough.
went off the tangent,
No,
but
no,
I
I
got here
think
15 minutes.
I,
I got
you
here
know,
15 minutes late, paper, so I had to make
no,
up
no,
for
don't worry
time.
about it. So what's true and where we are right now, right? Number one, what's true is, I think it was Bill Ackman, right? Like on one of those early spaces, and who had said like, and actually Wolf, our good friend Wolf was on there, and he asked the question like, what do you think we should see done? And his first response was, well, FDIC needs unlimited insurance, like unlimited deposit coverage, basically. And that's exactly what happened, right? Sunday evening, I think it was, we got the announcement. Okay, well, all of the deposits are going to be guaranteed, right? And no, this is not the first time that that's actually happened, right? Like that happened before. It didn't need like this crazy act of Congress that was going to take months or whatever to happen. I was surprised how fast like that was an immediate announcement. Number one, and probably like again what they needed to do. And so kudos to them for actually putting that out there initially. This morning, though, Biden comes on. I didn't even listen to it, to be honest. I don't know what he said, but I don't think that the president has any answers to something like this, just to be fair, right? It is
And in all fairness to him, and this is not, again, I'm not getting political. I'm not saying, oh, he's senile or nothing. Does
right.
he even understand it? This is high level
I
shit,
mean,
man.
I'm not going to say
I
he
don't know if
doesn't
he
or
even
whatever,
understands
right?
it.
But regardless, he doesn't have the answers, right? Like he's not the one that's going to be able to answer the situation, right? It's just not, it is what it is. He's got to get on and do his thing and be reassuring. So kudos again. Today, on the economic calendar, we have a closed doors meeting for the Fed, though, right? And I don't know what's going to come out of that, but right now they're behind closed doors having their emergency meeting right now. So we'll have more as it's fluid situation for sure. What needed to happen was to assure people with money in the banks that nothing's going to go haywire. Like things aren't really, you're not going to lose your money that's in a bank. This is the United States of America. That's not going to happen. Right. So forget about that. Right. And that's where we are in terms of a shareholder. Totally different story. Right. Like in terms, if you own money in these equities, well, that's where that's where it is on you, right, as an investor to do your due diligence and understand what's going on. So anyways, let's say, what do we do, right? I had a couple of things, and if you're in the servers, like in my server, what my thoughts are on this. I'm just going to screen share really quick, but this is where we are, right? So like I can't say one way, it's not financial advice, but I can just tell you what I'm thinking, what I'm doing, right? Here's, if you're not from an investing perspective, not necessarily trading, anybody who follows me knows that I've I've talked about gold quite a bit. I will say, it's already starting to move. And I think for anyone out there, when Michael was talking about Jaguar, right? He's another guy that we trade with. A lot of these moves have already happened. So if you think you can go out and chase a move at this point, I would say probably good luck, right? But I mean, the majority has happened already. Just relax, right? No need to go, today. And like, here's the thing: we're in a situation from a trading perspective, and the title of this was just navigating volatile markets. What I'd say is, as a trader, I didn't take a single trade this morning. I didn't hop on a space. So I'm like, I'm not trading this morning. Right now, I'm more concerned about getting out of positions. Like if I was going to take a trade, and I mean swing trade, day trade, whatever, I don't know what's going to happen during the day, right? We have a big economic calendar ahead of us, actually. I don't even know if that's going to matter, but flash crash, things like that, things going up, looking good, and then poof, right? Like getting slapped. I wouldn't put it past it, right? So like and if I have trailing stops or stops, that's what I'm more concerned about at this moment. I think this week is going to be chill week. right? From a trading perspective, and more about learning, if you will, right? We got to learn what's going to happen. We have to learn what's going to come out of the CPI and PPI this week. But what I can say is, from a longer perspective, there are things that are just clearly more dangerous and safer than others in this environment if nothing happens, right? Number one, I'll say I don't think that we're going to have this massive crash, right? Like I don't think that the Qs are going to fall off a cliff, right? I just don't see that happening. If the market, or let's say Mr. Market, right, decides to punish a certain area, right, they're gonna go after. I think the bank move has majority again been done, right? So if I'm still in equities, what do I need to be aware of? I need to be aware of VC funded companies. I think if you follow the trail down, right, follow the money. Who were the companies in that Silicon Valley Bank situation that had lines of credit, not cash, but like massive lines of credit that they're necessarily that might be leveraging? Roku was one that came on, huge headline. But just in general, VC funding companies. I'm not even going to say specifically tech, but like biotech might be in there, VC funded companies, people that have, these massive mortgage rates, REITs and things like that, anything high yield, I think are not as safe as you might think in this environment, right? And we can see that in the charts are already been selling off. So I would just be aware something like that might be more dangerous than you would expect in this specific environment. Whether or not it's true doesn't matter, but the market may come out and decide that these situations, these places need to be punished just because of whatever FUD, right? So be aware there. What's a little bit safer to me are like gold is your precious metal type of thing. I think at the level that we were at last week, it was like a really good level of support in general. I don't see that really falling off a cliff, right? And if you play the tape out, let's say the Fed does pause, let's say, right? What's happening right now is that the dollar's falling off a cliff. We start talking about if there really is FUD, what's going to happen in the real economy? Will people, Michael's saying, don't put your money in a shoebox under the bed. But let's say they did do something like that. Well, what's going to happen? Dollar's going to fall off and gold is going to run, right? And we talk about real rates, things like that. There's so many scenarios that you could put on for gold or precious metals. And just from a technical perspective, I think they're well defended areas right where they are right now. So in terms of safe, technically, fundamentally safer. Are they going to run? I don't know, right? I don't know, right? What kind of companies I don't think are going to get punished in this environment are your large caps, right? Your large cap, specifically high free cash flow companies, right? We look at, Pfizer had a headline this morning, 45 billion offer for CGen. I mean, companies that can make those types of offers in this environment that have that kind of cash flow, that's where you want to like pay attention to. I don't think those are going to get necessarily punished, but hey, if they do, those are personally the dips that I'll probably be looking to buy. Not going to be looking to buy something that's got a ton of debt on the books and low free cash flow that's got a burn rate that's astronomical, right? Just not going to happen. In general, large cap equity, and I think that's a safer place if you look at the Russell versus the rest of them. Russell by far your mid cap sector, by far the weakest of the bunch, and I think that's where you tend to go, right? That said, all those shenanigans we come into this week when we have this FOMC meeting next week and we get CPI and PPI later on in the week, tomorrow and Wednesday, that's really what the focus is going to be. If there's a focus that's not SIVB, it's going to be on the Fed rate, right? And I think this is what's important to note. And I've been talking about this, anybody who watches this, I still believe this is a stock figures market. I still believe you got to find your spots that are undervalued, buy when they're undervalued, and then you got to sell when they're fully valued, right? And last week, here's like one day ago, this really light blue line. This is what the market was predicting last week, right? I think we're at 475 right now. This is about 25% probability. This wasn't there last week, right? So the market is in this situation where Goldman Sachs puts this note out. Well, hey, we don't see any Fed rate increase anymore at all based on 24 hours or 48 hours worth of events. I don't know, right? That might be going a little bit far. So am I jumping at the bit to buy this market? Oh, no, right? Definitely not. But, when it was a little bit, expecting 50 basis points, I think that's a good example. Like when everybody was like, oh, 50 basis points coming, market starts to dip a little bit. That's like, okay, maybe a little bit overdone. And then probably want to sell when we're about right estimations, right? Like right now we're a little high, right? I honestly think we get 25 and we stay the course until further notice, right? Like they're super data dependent, right? Overly data dependent. And that's been the theme. And whether that's a good thing or a bad thing, because there's so many revisions, blah, 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 they're fluid too. Right. And so the gist of this, to me, I still think that we go sideways. I don't think we make any big moves one way or the other until we have like definitive like action, definitive outcomes. And in the meantime, I just think we chop, right? We're going to have companies that have really good free cash flow that are doing really well in this economy. And they're in sectors where most of their peers probably aren't. And they're going to hold up those sectors from an ETF perspective. And they're going to be an outlier. And they'll start to emerge. You'll start to see which ones are which, right? But that push-pull from an ETF perspective, I think might just be dead money for a little while. I don't think they're going to fall off. I think the bigger ones might hold them up. But again, that's kind of where I am, right? Let me see where we can do. Yeah, so we had, I'm just going back to this. We had non-farm payrolls. We had unemployment rate going, actually, let me see, going up last month, which was odd, right? And participation rate, really there's plenty of jobs that are coming out that we see, but people still aren't really taking it, right? Michael actually touched on some of the budget statement stuff. We still kind of have that looming, right? We still have that, are we going to increase the budget stuff, on the outset, that this has completely been sidelined for a while. But to be fair, we saw a bigger deficit once again from a budget perspective. I think, tax refunds, which is the government's income, those like went way up because people made a lot less money. So government's not making what they used to make from a tax refund perspective. And yet, to his point, this are some of the concerns, right? We had the massive, student loan forgiveness. We have Medicare bills. We have Ukraine. We have all of this other stuff, like there's these things that are looming that people aren't going to be talking about right now, just because Silicon Valley Bank and that kind of situation is going to take precedence. But don't forget, this is still out there, right? When we come to this week, right? So we have today, that closed door Fed meeting that's happening as we speak. Then we have CPI tomorrow, right? And then PPI Wednesday. And that's really, for the most part, it until we get to Friday. So I'm just going to move into CPI. So that's tomorrow, right? And expected 5.6. I would normally say, hey, look, if we come in at this level, I would expect that. Or if we come in at this, then we expect that. But to be fair, I just don't know this week, man. I'm just going to throw it out the window. But this is where we are. And again, I think we get that little push-pull, right? We got another Fed speaker. CPI is going to be that kind of, for something like a gold trade, I think is going to be more of a defining moment, right? Than a larger equity move. That's what I'd say. PPI comes in on Wednesday. And again, if you guys remember, PPI is the one that really led the way, down and up. But, this is just because CPI is first doesn't mean PPI isn't as important. It's just as important. And then next week, I believe we actually get the actual FOMC meeting. I think it is. Jobless claims, oddly enough, they haven't been really moving markets, but we did get the jobless claims last week, definitely moved the markets so jobless claims went up slightly. We don't want to see like a lot of unemployment. More unemployment, then the less of a probability there's a Fed rate hike. But again, we're just in this weird situation where I think there's not going to be, I don't think any officials are going to be making major knee-jerk reactions. But I do want to go through this. The market, on the other hand, may do what it does, but I think it's going to be in that situation where, like, look, pay attention to the economic calendar if you're day trading, right? What I'd say is this is a situation, this is a market where I'm personally changing my trading style just a little bit to Excalibur, what's up? To take profits a lot faster, right? Like if you haven't sat down in the pre-market and drawn out your levels from a trading perspective, I wouldn't trade, right? Like you gotta be on it. You gotta take profits right now when you get them. And quite frankly, they're a lot faster trades than normal, right? So maybe an hour, and that's really where I'm at. In terms of swings, I'm more neutral. A couple, top watches for shorts, things like that. But even the ones where I'm bullish on, I'm still super hesitant to take any outsized bets. I think sizing is important right now. Size low. Um, Pick your spots, plan the trade exit before you enter, and be in and out in as little as possible of time in this volatile situation. Funny enough, I did a video like not too long ago on the VIX. This morning, the VIX was 30 something, right? And I'm looking at futures, like futures were flat. I'm like, but the VIX is at 30. I'm like, this is a prime example. Like, what is going on? There's this little disconnect where things are getting shaky. By the way, VIX basically it works, but it just tells you that people are buying further dated options than normal, right? 27 to 33, I think, is that day that time frame that the VIX actually looks at on specifically SPX. I'm not going to measure the Qs or diamonds, or it's just S&P 500 index options. And it's just another one of those things where, like, can I really put any massive amount of weight on any one barometer right now? I just can't, right? So pick your spots, trade quick, be in and out. I think that's mostly it. Friday economic calendar, again, consumer sentiment could really be a big one, right? So this week, I look across the board and I'm like, man, I think we're in for some chop. I think we're in the sell the pops, buy the dips, sell the rips scenario. And honestly, don't make any big moves. I'm not making any big moves until we have some clarity on what's going on. But really, that's my gist in a nutshell. I don't have a whole lot. We can go over some charts if you guys want. I know we're running up on time, but I think, if you're in the servers, take a look at that. One thing I will do, here's what I'll do, is I will grab my main chart and I'll just say, from an S&P perspective, we do want to do this, right? So every month we get non-farm payrolls, first Friday of the month, typically. This last month, we got it a little bit late. This is an average weeks range for the S&P, this orange box right here. But what I'll note is that, if you go back and we go to the last FOMC meeting, or not FOMC, NFP, we got this last NFP. Is this the right one? Damn it. Whenever we get NFP, so here was this NFP. This is January non-farm payrolls, right? This ended up being the low of the market for January right here. Whenever we get non-farm payrolls, that's how important this number is, right? So you take basically the low and the high of that day, and that becomes your really like your mark for the month, right? And so if we're looking at January, here's our NFP candle right here. This was the low of the month for the entire month, right? Here's the high that was defended the entire month of January right here. So this is going to hold true every month for the most part. For me, this is like core barometer every month. And what we got last Friday was another kind of candle. So right here, this is the high for NFP, 393.50. I will say if we're above 393.50 this month, I'm okay being a little bit more bullish in terms of equity stocks, right? And the low of the day was 384.12. So if we're below 384.12, okay, we're probably seeing a little bit lower. That day's range, that last Friday's range, from a technical perspective, it's a fundamental event that's going to create technical levels for us. That's my range. Right now, we're smack in the middle. So where do I think we're going? I think we're staying in the range, right? And until we break out of that range, I really just want to kind of sit on my hands and wait for a real trade setup to start, right? And so that's what we're looking at, right? Again, this market's in a situation where we're making outsized moves very quickly. That one day, like if this is an average week's range, this orange box, right? We almost moved an entire average week move on Friday, right? Like that's insane, right? And we did do it almost basically on Thursday. And so we've been making this move. I think it's time. This is a pretty big move. recently. So this is March 6th, last week, 6th to 10th. That last 7 days, that's a pretty outsized move. It's above an average week's range. So what I could say this week, I think we go sideways, at least for the week, and then we get a little digestion. FOMC next week, that's going to be the one that's going to kick us off. And by the way, we're chopping around our 200-day moving averages, right? So whenever we get around 200-day moving average, this red line here, this is the Qs, Nasdaq 100, we tend to get super choppy. Again, average week's range, Qs, even tighter range than SPY, right? From a technical perspective, holding up the best, oddly, but not really oddly, right? So if rates do go down, that's not super bearish for tech, right? It makes it a little bit easier for tech to lend, or to borrow rather. I think this holds stronger than most. Mid caps, IWM, clearly the weakest of the bunch. I wonder why, right? And that's really, these guys would be at risk. This is that small cap stuff. Things like semis have been showing, and I haven't even checked SMH today, have been showing relative strength, like crazy amount of relative strength. I don't think they fall out of bed based on what's going on, right? I just don't see it yet. Call me in a month and I might have a different answer. But for right now, we're not breaking any major levels. We don't have any massive structural breaks. From a technical perspective, we're still in line from where we were. Nothing's really broken unless you're looking at things like a KRE or things like that, right? Like KRE is that regional bank. This was what do you call it? This was really the focus, right? And this was that move. But again, we're already starting to kind of like flatten out. So would I want to press bets here? Not necessarily. So just be really cautious out there. Just know, hey, we're still in the range that we've been trading in for a while. Again, this is the barometer. Dollars falling off, right? Rates made huge moves in the last, I don't know, 3 or 4 days. GC, gold futures, this is where I'm talking about, right? Like, where is the money flowing? It's very clearly going into gold, right? Like this is this is gold, right? This is that support I was talking about right here, right? 1800 on gold futures. This is a very strong level of support. It's well supported at these levels, right? So do I think it's dangerous? No, not necessarily. Does it have potential to make a run? Gold was always my thing. If we were going into, let's call it a stagflationary environment, that would be kind of your hedge. Like if the dollar does fall off, right? We've just been, we had a nice little bounce, but it's just a higher low, really. I mean, a lower high so far. Oil, I think also kind of goes into a bit of a holding, but maybe oil falls for a little bit because they've had this consolidation, might be ready for a move. Oil did get pressed down because some of the fears on like maybe people don't travel as much, things like that. So little kind of things to watch out for. Oil is having a very hard time. So what I'd say is this kind of like 80 level right here was last week kind of where I was looking for a potential short opportunity. We hit that and immediately rebounded or rejected. So until I think we're just in this range, right? So you have very similar support on oil. I think oil kind of goes right in this range. You do have a little bit more downside, but I mean, not much below 70s. So we'll have to see, does the full reflation trade or deflation trade rather go on? I don't know. I don't think so. It's too early to make any major calls, but if I'd leave with one thing right now, is like, look, nothing's broke from the charts perspective yet. There are certain areas like, gold, precious metals that do look well supported at these levels. And in terms of the rest of it, just know what you own, do your own research, right? And, be cautious of stuff that might be exposed overly to some of those sectors that we pointed out earlier. But that's it for me, Michael. You got anything for the crew before we take off? I think you're muted.
I am. Sorry about that. No,
Okay.
Just you did it as usual. Amazing job. I'm pissed that I missed the first 15 minutes of it. But yeah, just
don't worry.
I
it's
think
available for replay.
The best point, well, I think the best point you made is this is a great time for education. A lot of stuff to learn this week. A lot of stuff to learn this week. And I don't mean education like trading education. It's always a good time to do trading education. I mean, we'll get a lot of information from the market, right?
We're going to learn a lot. No need to make any moves. Yeah.
Absolutely, absolutely. I mean, I think that's the best opinion. Let's not use the A word, advice, but it's the best opinion, right? That I think you had. I was like, yeah, you're definitely on there with that. So yeah,
Yeah, I
good luck to
appreciate it, man.
everybody.
I
I mean,
appreciate you hopping
and
in.
just
If you guys didn't know, Michael is like the OG of OGs, right? Like, love this guy. Definitely worth the follow on Twitter. It's at Tiny Real. And I have stock picks too. If you're in the server, otherwise give the video a like on YouTube, throw the channel a follow. Totally appreciate all your support, guys. And until next time, I think we'll see you around. Appreciate it, man.
thanks, guys.